Hey there, Wall Street winners. It is Monday, April the 8th, and we are pre-market at almost 20 after 8 Eastern time this morning. And what we can see here in the futures market in the Bloomberg app is that the Dow Jones is up 0.03%, so pretty much even with where it closed. The S&P 500 is down 0.01% and the NASDAQ 0.02. So again, even though they're in the red, it's pretty much where they closed. The European market, the United Kingdom market there, the FTSE is up 0.35%. And that's an interesting piece to look at because if the UK is up, typically what we'll probably see is that the S&P and the Dow will be up at a similar amount at some point throughout the day. Not always, but it does look good that way. The Canada TSX down here towards the bottom, just under, so we've got the add, then Mexico, and then TSX for Canada, and then TSX 60. Both of those in the green here in the futures. So that's positive. And typically, if the Canadian exchanges are positive, that means that resources and commodities are going to be pushing higher for the day because the Canadian exchange is mostly on mining and different commodities that trade in that market. So if we flip away from our Bloomberg app and go over to the Yahoo Finance app, what we're seeing this week as we look ahead is we've got major bank earnings with, I believe it's Citi and JP Morgan, it might be Bank of America too, but JP Morgan's the big one in my mind, coming out on Friday. And we have consumer price index data points coming out on Wednesday morning. So Wednesday is going to tell us where we are with respect to inflation. It's going to give us another data point around CPI data for the US economy. And where that's important is we want to see that inflation level trending downward, not upwards. In the last couple of months, it's trended upward, only slightly, but it has been trending upward. And that's a red flag for the Federal Reserve. They need to see that going down consistently in order to lower interest rates. And if it doesn't do that, then there is a potential risk that interest rates not only won't go down, but they actually could increase interest rates. And that would be, I think, a shock to the market. And that would cause, I think, a big pullback, maybe temporary, but it would cause a pullback. Or a correction or whatever you want to call it. So that is something to be leery of come Wednesday morning. The other thing to look at this week is a couple of things. Crude is pulling back, and so we should see the oil stocks do the same thing. And we've got those financial earnings. So what we don't have is a lot of information this week on the tech front. And so the tech front will be an interesting trade. And I do believe that the oil stocks have a lot of opportunity in it because I don't think crude's going to continue to go downward. This should be a short trend. So if we look at oil here today, crude is off 67 cents. But as you can see from the graph, it has been down much more in the early morning than it is now. So it's slowly coming back. Now, whether it crosses the line and goes green today remains to be seen. But if it is down at open, what you may see is a bit of a pullback in some of the oil names. And if you do, and crude continues to move upward and correct and move into the positive, which I do expect it will, maybe not today, although I do expect it will today, but certainly throughout the week, then I think we're going to see some more positive movement in your oil stocks. So on a pullback like we had on Friday, I would look at one of my faves, Valero, just coming out of the Valero PGA Open down in San Antonio, Texas this weekend. Great tournament to watch. And a lot of hype around Valero because of that, especially in that golf finance community. Valero might be an interesting one if it pulls back into the 180, 179, 181 range, because it is likely to continue to get up into the 184, 85 range. Obviously, the others are there as well. So look at those. Exxon has been doing very well, up to 121. This was a stock down at 101 to 103 less than a month ago. So it's made almost a 20% move in a month. If we look at that chart, just to show you, you can see that, well, it says 105 here, but it was down, if we go a little bit longer than a month, I guess, down in the 101 range, and it's now up close to 122. So that's a big move right there. If we continue down into tech, we've had some major corrections in tech. So one of the ones that did very well on Friday after the pullback at close or coming into close, thanks to Neal Kashkari's comments on Thursday afternoon, was Salesforce. So Salesforce ended in the low, I believe it was the low 290s. If we look at this on the 5-day, we can see, yeah, it was down at the 290 range here in 294. It closed up almost at 302 on Friday. So that was a nice almost $8 correction right there. Palo Alto definitely corrected last week. It has not recovered. So that's a play this week to see if it will make a recovery, because it is definitely not a stock that should be priced, in my opinion, in the 269 range. This is more of a $280, $290 stock. So we've seen a correction. We haven't seen a recovery yet. We've seen a bit of a recovery in Cloudflare, which is net. So it dropped down into the 93 range, 92, 93 last week, and it's popped up into 96. It should go north of 100 with earnings, probably 110 or 120 if earnings were as good as they were in the first quarter, which they could be. So that stock is an interesting one to follow as well. Microsoft almost near its high. So again, you have to question, unless earnings are extremely good, does it have more room to go? ARM has come back, and it's kind of hovering in a range there of 122 to 26. I think it could go north of 130. Semiconductor has not recovered. It is corrected. It's been hovering in the 72 to 76 range, and it's at 69 right now. And then as we move down, AMD, another one. It recovered a bit on Friday, but still well under where it has been. If we look at the 5-day chart here, well up into the mid 180s, so 186 range, and it's down now at 170. So I wouldn't really be looking at the ones that have corrected and caught back up. Another example of one that corrected and went to an all-time high is Meta. And I love Meta, there's no question, but it just seems a little rich at 127. They're really going to have to blow earnings out of the water, and I believe they will. But I think there's other potentials out there that will give you a greater return in a shorter period of time. So I'm waiting for a pullback on Meta prior to earnings and then buying in and holding it through earnings. NVIDIA set again, it came back quite a bit last week, I think down to 859, 860. It came up to 880. I think it has potential to go up past 900 and into the maybe 930s, 960s again. It is up pre-market right now. I love Alphabet and where it's at and what it's doing. At 153, I'd wait for a bit of a pullback on that, maybe down to 152, 151. Buy it and then exit around 154, 155, wherever you're comfortable in taking your profits. And then the financials. So I've been ignoring the financials for the last couple of months because there really hasn't been a lot to talk about, really waiting for that trigger from the Fed on interest rate changes. And now with earnings season about to start and JP Morgan announcing on Friday, I think it's an interesting time to look at this if you believe that these are going to come out with better than expected earnings. And I do believe that JP Morgan will come out with better than expected earnings. So they're announcing on Friday. I'm waiting to see what happens this week. Typically what will happen going into earnings is JP Morgan will either go up consistently through till Thursday, and then at earnings, even if they're good, it tends to drop. Or if they're extremely good, it'll continue to go up. Or JP Morgan will drop a little into Thursday, providing a great opportunity to buy. And if earnings come in solid or really solid, then it'll jump quite a bit. So I'm waiting to see what happens today and tomorrow before really getting into too much JP Morgan and see what that trend looks like. If MTB this morning opens minus $5 or 470 and gets down into the low 130s, I am definitely going to pick this up. It has earnings next week. If it ultimately is trading in the 134 range, I think 134 is a phenomenal price for this stock because I do expect that it will beat earnings and it will beat them to the upside. And then the others that are coming out next week, Morgan Stanley. So again, I played this a little bit on Thursday and Friday, more with options than direct purchases. But I do expect that this stock will get into the $95, $96, maybe $98 range next week if they have good earnings. And then there's Goldman. So Goldman here down $6 pre-market. It's attractive at 402. I think it has the potential, again, if it follows this cycle, and this is where this might be, this and Morgan Stanley and others, maybe stocks to just hold off on this week, because if we see what the results are on Friday from JP Morgan, that might be a better time to jump in and buy some of these pre their earnings that come out the following week, because if JP Morgan disappoints, it should bring down all of the financials at the same time. That would provide an opportunity to get in at a lower entry point. And then if any of these earnings are better than expected, and just because one bank has bad earnings doesn't mean they're all going to have bad earnings. So if JP Morgan, as an example, and I'm not saying this is going to happen, but if JP Morgan on Friday is one of the first ones to release earnings, has worse than expected earnings, it will bring the level of all stocks down typically. You can buy in at that lower level, and then if one of or two of those has better than expected earnings, their stock could pop up. And that's what happened in the last quarter, where Goldman and Morgan Stanley really dropped and JP Morgan shot up. Now, that said, JP Morgan, if we remember back to last earnings, it had great earnings and it shot up in the morning at open for about 20 minutes, and then it fell down by the end of the day less than it opened at. So it closed in a down position. So be cautious of that as well and follow those stocks into the first 15, 30 minutes of the trading day so that you can exit at a profit on earnings morning or earnings day, get out and then see if there's an opportunity potentially if things are trending downward after the pop to get back in at a lower price and then ride that wave back up. So don't just sit on it, but pay attention on earnings day. And that's where we are leading into the week this week. I wish you all the best in your trades. If you like what you see, leave me a comment, subscribe to the channel, let someone else know, and